Hello traders, you're welcome to this video. In this video, we are going to be discussing higher highs and higher lows. You know the higher highs and higher lows are bullish structure. Okay, in case of if you didn't know, higher highs and higher lows represent a bullish structure. It represents that it is a bullish trend. Okay, so higher highs and higher lows are very easy to find. They're very easy to locate. In fact, right now we have higher highs and higher lows in front of us. Okay, so basically, higher highs and higher lows, as I already said, it represents a bullish structure. It represents that the asset is trending upwards. Now, how do you identify higher highs and higher lows? Basically, it is as easy as it sounds. You have a high, right? You have a high, and then you have another high that is higher than the previous high. I know it sounds somehow, but that's just it. Okay, then we have another high. Try as much as possible to make sure that you confirm that the subsequent highs are higher than the previous highs, okay, to confirm the validity of that bullish structure. Okay, because the bullish structure has to be valid before you can be sure that your buy trades are in the right direction. So you don't go and enter a buy trade when the bullish trend is about to reverse. So we can see that the structure was broken around here because we had a lower high. The structure was broken. Then now this is our first low. Let's just use this as our first low for this example. And then we have a higher low, right? This other low is higher than the previous. This other low is higher than the previous. This other low here is higher than the previous before we had a break of structure. And you can see a break of structure now happened. We now had a lower high and a lower low. So at this point, if we are entering buy trades, because this is a bullish trend, right? You can decide to trade in the direction of the trend, or if you want to counter trend trade, then you would want to ride the pullbacks, right? After the higher high forms, ride the pullback to the higher low. After the higher high forms, ride the pullback to the higher lows, like that. But it's always advisable to trade in the direction of the trend, though. So after the low forms, you ride a buy trade to the high. After a higher low forms, you ride a buy trade to the next higher high, like that. Now, when using this strategy, you might want to consider using other indicators such as the stochastics or moving averages, just to add on to, for additional confirmation. Just for additional confirmation. So I'm just going to remove this object since the indicator is making it change direction. Okay, so when you have a bullish structure, and also trend lines are very useful, okay, they come in really handy when you are dealing with higher highs and higher lows. It helps for you to track the movement, okay. So we can see that we are having higher highs and higher lows. We can decide to enter a buy trade after this low, exit at the next resistance, or we can just exit when a high has formed and we have perhaps a candlestick pattern, for example, like this, giving us a sell signal. We can then exit our buy, and then when we have another bullish candle like this, we can enter another buy, and then perhaps exit at the resistance or exit at the site of any bearish candlestick reversal pattern. Or we can use stochastics for additional confirmation. Perhaps when you enter a buy, you can see that stochastics was at the oversold, pointing upwards, indicating a buy signal. When it gets to the overbought, we can use that as an additional confirmation for an exit of our buy trade. When we are in a sell, for example, we can use this as an additional confirmation to enter a sell. You can see overbought pointing downwards. This one is at the resistance of the trend line, additional confirmation. When the stochastics got to the oversold, confirmation to exit your sell trade. Then you can see we have the doji forming here, additional confirmation to exit our sell trade. So basically that is how the higher highs and higher lows works. It's a bullish structure. But when you are trading it, try as much as possible to also use other indicators for additional confirmation. Use support and resistance levels for additional confirmation. Use trend lines for additional confirmation. Okay, these are very important. Very important. Okay, so I hope you found this video insightful. Kindly like and subscribe for more trading insights. Meanwhile, remember that risk management is very important, and try to always manage your emotions when trading. For example, when trading the higher high, higher low strategy, it's a bullish structure. So it is advisable to trade bullish trades. But if you're a counter trend trader, that's fine. But just be careful, because a trend can be so strong that pullbacks can be so minimal. Okay? Now, also remember that risk management is key. Remember that you should be using a good risk to reward ratio. For example, if you're risking $1, you might be targeting $2 or more. Okay? So these are very, very important tips to note, right? Very important tips for successful trading. Kindly hit on the notification bell so that you're going to get updated, or you're going to get notifications on more trading videos that I post for more trading insights. I really hope that you enjoyed this video. Cheers and happy trading.